Good morning, and welcome to the Congressional Black Caucus Foundation's Policy for the People Economic Advancement Summit. I'm Nicole Austin Hillary, and I am the President and CEO of the Congressional Black Caucus Foundation, and I am so honored to have you all with us this morning. You know, we have folks gathered from all over the globe, and I know you are all gathered here because we have a very important set of issues to discuss today. The power and the economic stability of the global Black community is of the utmost importance to all of us. And so we are proud today to gather this group of experts and policy advocates and grassroots individuals to help us talk about how do we make a way forward? How do we educate ourselves about the issues of concern to our community with respect to the economic issues that are at the forefront? And how do we create real change and impact? You know, policy for the people is not just a phrase for us here at the Congressional Black Caucus Foundation. It really does speak to the heart of who we are as an organization. You know, our mission is empowering the global Black community. And those are not just words for us. That is what we have been doing for decades. And so focusing on issues around Black wealth, around home ownership, around how Supreme Court decisions impact economic opportunities for the Black community, that is serious business for us here at the Congressional Black Caucus Foundation. And we are focused on not only being up to date and knowledgeable about those issues, but we are focused on how we can ensure that the community has the tools that it needs to tackle these issues. And in fact, how the community can work together in collaboration to figure out how to strengthen itself and how to make certain that we are creating opportunities for economic advancement for the entire global Black community. So we are pleased to have you all here with us today. We know that together we are change makers, and that's what we're going to talk about today. How do we create real change? I'd really like to take a moment to thank our sponsors who have made it possible for us to gather here today. Our sponsors include Visa and Southwest Airlines. Without their support, it would not be possible for us to gather here today and to have this critical conversation. I also want to encourage you and thank you again, our participants, because without you, this wouldn't be possible. And we want you to actively engage. This is not just a moment for you to sit back and listen, even though we have lots of smart and talented speakers today. We want this to be interactive. You will have opportunities to put questions in the chat, to put comments in the chat. As my team is famously hearing me say all the time, I don't believe in policy sessions and summits and conferences just for the sake of having them. I believe that we all have to walk away with real tools for action and tools to create change. And we can only do that if we are talking and exchanging ideas. So I encourage you all to do that. So again, thank you for joining us. Thank you for being here as we work collectively to focus on the issue of economic empowerment for the Black community. I am confident that we can make a difference and that we can give our communities the tools that they need to do better and to be better. So with that, I would like to introduce and turn it over to our Vice President for the Center for Policy Analysis and Research, which is the division here at CBCF that is responsible for today's Policy for the People, Dr. Jonathan Cox.
Thank you so much, Nicole. And good morning, everybody. Welcome to the Policy for the People Economic Advancement Summit. Now, I'm Dr. Jonathan Cox, Vice President of CPAR, and I'm deeply honored to be here with you today for this important event. Now, in the Center for Policy Analysis and Research, we are committed to improving the socioeconomic circumstances of Black Americans by providing timely, relevant analysis and policy recommendations that directly address pressing issues impacting Black communities. Now, throughout today, across 3 virtual sessions, we embark on a profound exploration of an issue that is vital: the economic advancement of Black people. Now, in a world where homeownership signifies financial success and builds generational wealth, this first session explores the power of banking Black. We confront disparities in homeownership rates and envision a future where Black-owned financial institutions act as catalysts, bridging gaps and creating financial security within our communities. Now, in our second session, beginning at 1 p.m. today, we confront the consequences of the dismantling of affirmative action, recognizing that educational opportunities are paramount to economic empowerment. And we dissect the complexities of affirmative action, aiming to redefine the narrative and create avenues where every dream can thrive, unencumbered by systemic biases. Now, in our third and final session, beginning at 3 p.m., we acknowledge the historical significance of unions in the fight against racism and inequality. Now, through the lens of labor activism, we explore the enduring impact of unions on Black economic outcomes. Together, we seek to amplify the voices of workers, fostering solidarity, empowerment, and social change. Now, our commitment to open-minded inquiry sets the tone for today's discussions. We're here not just to talk, but to listen, to learn, and to act. We recognize that economic advancement is not just a lofty goal, but a fundamental right. It's about dismantling barriers, overcoming disparities, and creating opportunities where they are desperately needed. Now, I want to extend my gratitude to the CBCF team, our sponsors, moderators, panelists, and every single participant who's here today. Your presence really signifies your commitment to this cause. It's this dedication that fuels the engine of change and propels us forward. Our shared goal today is not just to gain knowledge, but to turn that knowledge into action. Let's leave this summit not only inspired, but equipped with the tools, ideas, and connections that are necessary to make a difference in our communities. We are the change that we seek. And now it is my distinct pleasure to welcome the board chair of the Congressional Black Caucus Foundation and representative of Alabama's 7th Congressional District, Congresswoman Terry A. Sewell.
Hi, I'm Congresswoman Sewell of Alabama's 7th Congressional District, and I'm proud to serve as chair of the Congressional Black Caucus Foundation Board of Directors. It is on behalf of the entire CBCF board that I welcome you to our Policy for the People Economic Advancement Summit. Today, I join you as a staunch advocate for economic equity, empowerment, and justice for the Black community. During these times, as critical as they are, I know that our collective efforts can pave the way for meaningful change. In Alabama's 7th Congressional District, I have seen firsthand the economic challenges facing our communities. I have seen hardworking families striving for a better future who are too often hindered by systemic barriers that have persisted for generations. All across this nation, limited access to education, job opportunities, and affordable housing has created a cycle of poverty that we must break. To be clear, our struggles do not define us. Instead, they serve as a testament to our resilience and determination. We are a community rich in history, culture, and innovation. We are entrepreneurs, scholars, and visionaries, and it is high time for our economic realities to align with our potential. During today's summit, we join together not only to discuss our challenges, but to find solutions. We acknowledge the disparity in home ownership and recognize the power of initiatives like Banking Black, which can uplift our neighborhoods and empower future generations. We confront the consequences of dismantling affirmative action, and we understand the urgent need to create educational pathways that lead to prosperity. We celebrate the powerful role of unions in closing the wage gap and creating workplaces that are fair and just and equitable. Today's summit is not just a conference. It is a call to action. It is a reminder that the policies we advocate for, the decisions we make, and the partnerships that we form can reshape the economic landscape of our communities and indeed the entire Black community. I urge you to engage deeply, to question passionately, and to collaborate fiercely. Let us not just discuss the need for change. Let us be the change. It is my hope that you will leave this summit not only with insight, but with actionable strategies and shared determination to transform our communities. As we forge ahead, let us never forget that the power to change lies within us. Let us harness that power, working hand in hand to usher in an era of economic prosperity for all. Thank you again for joining us. It is now my honor to introduce my colleague and friend, the chair of the Congressional Black Caucus and representative of Nevada's 4th Congressional District, Congressman.
Hello, I'm Congressman Stephen Horsford, and I'm proud to represent Nevada's 4th Congressional District and to serve as chairman of the Congressional Black Caucus. Thank you for joining today's event aimed at informing economic advancement policy discussions. As someone deeply committed to confronting the economic challenges faced by the individuals residing in Nevada's 4th Congressional District, as well as the entire Black community across the country, I'm grateful for the opportunity to speak with all of you today. In these times of unprecedented challenges, our collective resolve and dedication to economic equity are more critical than ever. In the vibrant and diverse communities and nationwide, economic disparities persist. Too often, our families face barriers that hinder their progress, such as limited access to quality education, job opportunities, and affordable housing. It's not just a matter of statistics, it's about the dreams deferred, the potential untapped, and the opportunities denied. But today, here at the Policy for the People Economic Advancement Summit, we gather with a shared purpose to transform these challenges into opportunities. We recognize that economic empowerment is not just a policy goal, it is a moral imperative. We must ensure that every individual, regardless of their background, has a fair shot at success. And we must create pathways that uplift our communities, that break the cycle of poverty and foster generational wealth. In the discussions today, explore the complexities of these economic issues, dissect the root causes, and envision innovative solutions. As leaders, advocates, and change makers, we have the power to influence policy, inspire change, and to make a difference in the lives of so many. Our mission is clear: to bridge the divide, to eliminate disparities, and to build a future where economic opportunities are accessible to all. It's about creating an environment where every child can dream without limitations, where every entrepreneur can thrive, and where every family can experience financial security and upward mobility. I urge you to engage passionately, collaborate wholeheartedly, and advocate fearlessly during your discussions. Let's commit ourselves to tangible actions that will drive change. Together, we can create policies that uplift communities, empower individuals, and redefine what is possible for the Black community in America. So thank you for your dedication, your passion, and your commitment to this vital cause. Let's work hand in hand to build a future of economic advancement, opportunity, and prosperity for all. Thank you for your presence today and your persistence in securing a more equitable future for everyone.
Thank you so much, Congressman Horsford. And now it's my pleasure to introduce to you one of our sponsors from Visa, Adama Iwu, the Vice President for Political Strategy and External Partnerships.
Hi, for those of you I haven't had the pleasure to meet, I'm Adama Iwu, Head of Political Strategy and External Partnerships at Visa. Visa has been a proud supporter of the CBCF since 2015, and we're thrilled to participate in this virtual event today. Visa's mission is to connect the world through the most innovative, reliable, and secure payment network, and we're committed to being a force for good that advances social, sustainable, and equitable economic growth for everyone, everywhere. While the pandemic is behind us, the economic crisis it caused remains. It further spotlights the many inequities in the world's systems, policies, and infrastructure. This is particularly true in banking. In 2022, Visa launched MDI Accelerate, an initiative designed to reduce the economic disparities and expand access and opportunity in communities of color across the U.S. During this multi-year program, Visa invested $100 million via deposits with minority banks and provided tailored insights and digital solutions to help them meet the needs of their clientele and the communities they serve. Minority banks continue to be crucial to creating pathways to homeownership, and we're proud to support them through impactful partnership. Again, we're thankful for the opportunity to welcome this esteemed panel of experts. We look forward to partnering with the Congressional Black Caucus Foundation to reduce economic inequality and by collaborating on inclusive efforts that will serve everyone, everywhere. Thanks so much and enjoy.
All right. Now, I know that everybody is ready at this point to dive right into this discussion that we're going to have during this first session. And so now it's my distinct honor to introduce our moderator, Dr. Rayshawn Ray. Dr. Ray is an American Institutes for Research Vice President and the Executive Director of the AIR Equity Initiative, in which role he oversees a 5-year, $100 million plus investment in behavioral and social science research and technical assistance to address the underlying causes of systemic inequities and to increase opportunities for people and communities. Dr. Ray is also a professor at the University of Maryland and senior fellow at the Brookings Institution, and his research addresses the mechanisms that manufacture and maintain racial and social inequity. Dr. Ray has published over 50 books, articles, and book chapters, and over 50 op-eds. Please join me in giving a warm virtual welcome to Dr. Ray. It's a pleasure to have you here with us today.
Hey, Dr. Cox, thank you so much for that introduction. President and CEO Nicole Austin Hillary, I continue to be impressed with CBCF and CPAR and all the work that you all are doing. And I look forward to this engaging conversation. As we know, home ownership is a pathway to financial success and generational wealth, and banks drive wealth creation. According to recent reports, the gap between white and Black home ownership rates is wider today than in 1960, when race-based discrimination was legal. Wealth disparities, lack of access to loans, and housing discrimination practices continue to perpetuate the home ownership gaps in the United States. Banking Black, however, is a pathway towards greater cooperation and greater cooperative economics and increased financial security in Black American communities. Black-owned financial institutions directly allocate resources back into Black communities to provide pathways to home ownership through mortgage loans. Currently, there are roughly 20 Black-owned banks in the United States, and several have earned national prominence by delivering financial services to states nationwide. In this panel, I'm excited to be joined by some of the largest individuals interacting with these Black-owned banks, and we'll be having this broader discussion about Banking Black and the power of Black financial institutions in bridging the home ownership gap in the United States. I'm pleased to introduce first Giselle Roget, who is the founding principal of Overbrook Square Group, a Washington, D.C. based public affairs firm focused on the financial services and housing sectors. Giselle currently serves on the board of directors for the Home Ownership Council of America and the National Advisory Council of the National Housing Conference. In 2019, Women in Housing and Finance recognized her accomplishments with the prestigious WHF 40 Under 40 Award. Giselle became the first Black woman to lead the Office of External Affairs for a Federal Depository Regulatory Service, with her appointment as Deputy Chief of Staff for the National Credit Union Administration. Giselle led the Office of Single Family Housing of the Federal Housing Administration, where she oversaw policy changes that encouraged greater consumer choice and reduced regulatory burden in the $1.2 trillion program for low and moderate income homeowners. Giselle, welcome. Next, I want to introduce Michael Neal, who is a principal research associate and equity scholar in the Housing Finance Policy Center at the Urban Institute. Michael's work intersects with racial equity and home ownership, where he's assessed the disparate impact of the COVID-19 recession on homeowners of color, estimating differences of automated valuation models and the consequences of high interest rates for the Black-white wealth gap. Michael is the author of a series of great reports that you all should check out that are focused on minority depository institutions. Prior to being at the Urban Institute, Michael was a director of economics in Fannie Mae's Economic and Strategic Research Division. And before that, he was an assistant vice president in the Economics and Housing Policy Department at the National Association of Home Builders. Michael, great to have you here today. And finally, we have Jonathan Wilson, who is the vice president of mortgage at Liberty Bank and Trust Company. In his current role as vice president, he oversees the mortgage business unit, which includes production planning, process workflow, customer service, online origination, mortgage accounting, and mortgage loan servicing. Jonathan has led significant business processes, re-engineering initiatives involving control systems for accounting, mortgage, and service throughout his career. He's received numerous awards, including the 100 Black Men of New Orleans Leadership Award, where he has also served as president. He is on several boards, including the New Orleans Chamber of Commerce as a board member. Jonathan, welcome. So everyone, we're here to have this important conversation about Black banking. I want to start, and I'll go to Giselle first, and then we'll go to Michael and then Jonathan, and just rotate it around. Let's begin with some historical context. How have Black-owned banks historically contributed to the economic empowerment of Black communities in the United States?
Yeah, so I would touch on my experience with credit unions. And credit unions are very unique in that they have been able to provide such a source of credit both for home loans and also for small business loans for minorities. So when you think about minority banking, a lot of times people don't think about credit unions, but actually most minority depository institutions actually are credit unions. So right now in this country, we have 503 credit union MDIs. And of those 503, they're providing, according to our latest data available as of 2022, over $15 billion in mortgage loans. And when we look historically, particularly at our experience from the COVID-19 pandemic, I actually had the opportunity of working at NCUA during the COVID-19 pandemic. We saw MDIs stepping up in a dramatic way when unfortunately some of the largest banks weren't able to step up because they just didn't know these communities. So one thing that we saw was when it came to forbearances, which were essential, loan forbearances, which provided the opportunity for people to stay in their homes, we saw that credit unions were able to provide over $55 billion of loan forbearances. And when it came to funding for small businesses, we saw that the minority depository institutions were able to provide over $388 million worth of PPP loans with an average balance of about $56,000. And that was at a time when many small businesses were really struggling, and not just struggling, but they were struggling to access PPP dollars from some of the largest institutions, which frankly didn't understand how to underwrite a small business that may not have the same sort of record keeping that, a large financial institution would have. So when we look at our history, when we look at the current period, we really see the MDIs and particularly the MDI credit unions, which I'm more familiar with, really stepping up.
Yeah, thanks for that. Michael, do you have insights on how we think about this historical context and how we got to this particular point here today?
Yeah, again, I'm just delighted to be here talking about such an important issue. And, I think, building off of a lot of really the critical points that Giselle has already made, I think it's worth stepping back and, remembering that the banking system was not created for people of color. It was not created for the Black community. And, part of that is reflected in exclusionary type practices. But part of that is also reflected in destruction. You think about Tulsa, and you think about other instances where financial leaders actively destroyed the wealth that the Black community was trying to build. And so there, not just about wealth, but we can extend that to trust. Just lack of trust in mainline financial institutions, which limits, I think, the ability of communities of color, Black communities specifically, to desire or want to even access the financial services that might be offered, both to include themselves into the system, but also ultimately to build wealth. And so enter, Black MDIs. And to Giselle's excellent point, a large part of this certain conversation around Black banks. Black credit unions are also important in this discussion. And, what you see are a couple things. First, relationship banking, that Black banks are willing to sit down with you in person to work with you and work with oftentimes a group of people, because of the history of structural racism, that may not have the traditional types of financial profiles that would lend themselves easily to things like mortgages. But the second part is around their ability to offer the types of checking and savings accounts that can actually include Black people into the financial system in a way that hopefully they can trust those outcomes. We know that Black people are more likely than whites to be unbanked or underbanked. And then the third thing is around mortgages and home ownership. Certainly, our research shows that Black banks were much more likely to lend to Black applicants coming out of the Great Recession. And remember, this is a time in which, because of what was happening at that point, banks were fleeing not just mortgage lending overall, but the Black community specifically. But at the same time, what you're seeing is this counter-cyclical kind of effort that in the midst of a recession, when the economy is tanking, Black banks step in and increase access to wealth building for the Black community. And so, you take all that together, and I think it paints a really compelling picture of the benefits and the importance of Black banks.
Yeah, and Jonathan, I want to get you in on this, and I want to build on this point that Michael just made, which not only about the historical context, but also thinking about how Black banks can effectively engage with and support Black entrepreneurs and small businesses to stimulate business and home ownership opportunities. Michael just spoke to some of these things. From your perspective, how can Black banks engage in this way? And really, what are Black banks already doing?
I appreciate the conversation, and I want to thank the CBC Foundation for facilitating this discussion. I believe this is a really important discussion that we should have as a community, because it's about building opportunity and building access so that we can all grow. I think the question is very important, and you have to forgive me, I'm a storyteller because I'm a practitioner, but I think about who we are with Liberty Bank here, located in New Orleans, and what we did after Hurricane Katrina, which is a story to the testament of the resiliency of Black banks in this country, and what Black banks will do and the efforts Black banks will go through to ensure that their customer base and their community will be able to return. So August 29th of 2005, our headquarters was located in New Orleans East. After that day, our headquarters was under 10 feet of water. Every loan file we've had, every computer system, every piece of documentation we had was underwater. We had to send a team in to retrieve our backup tapes with no power and no water and fly it to a backup site. In doing so, we made available for our customers money daily for them to withdraw on, being 2 days behind and being able to verify whether or not the funds were available because our infrastructure was destroyed. That led to us having millions in losses in 2005. But lo and behold, the community took care of us. And in 2006, we had our most successful year on record. That's a testament to the resiliency of Black banks. When New Orleanians were trying to build their homes and no one had seen the level of devastation after Hurricane Katrina in this country that we had observed, we stepped in the gap with another bank in the community, a majority-owned bank in the community, to create a loan program for New Orleanians to begin building their homes before they're receiving insurance proceeds or federal government funds. We were able to deploy hundreds of loans before the first insurance checks were wherever cut. The partners in the program did a few dozen. I think that in and of itself describes what minority-owned institutions and Black banks do in their various communities, providing access to capital, reinvesting in communities, making sure financial literacy and education is available, civic engagement and advocacy, and the symbolic importance of having an institution that belongs to the community is the role that I think Black banks play. That's been a historical role throughout the growth in our community. What's unfortunate is that the number of MDIs and Black banks in the community is shrinking and not growing.
Yeah, Jonathan, that's so great to hear these comments, because typically when we talk about historical context, we go back a century right? We go back to the 60s. What you're highlighting is what's happened over the past 20, 25 years that people are currently living. And accordingly, when we think about that, we know that Black homeowners face a series of barriers during the loan and home buying process. Giselle, I'm going to turn to you because we know as we think about the past 20 years that these barriers are really influencing young adults. According to a 2023 survey from Redfin, 1 in 5 millennials and 1 in 10 Gen Zers do not see home ownership in their future due to rising home costs and affordability. We probably know that this is compounded for Black young adults who experience these things in a much more severe way. How can Black-owned banks address or alleviate these challenges, and what strategies can be leveraged to make home ownership more realistic for younger generations, particularly Black people and marginalized groups?
Yes. Well, thank you, Rashawn. And I think that that is the pressing question of today right now. And just to take a step back and level set. So we're looking at a Black home ownership rate, which is about 29 percentage points lower than the home ownership rate for white Americans. So it's 44% versus around 73% for white home ownership. And that's terrible. When we're looking at the conditions now, where we're facing 8% interest rates for a conventional loan, it very, very quickly becomes very unaffordable. And I'll just walk you through some of the key issues, particularly for younger Americans, millennials. So the first one is going to be debt to income. This is an issue where for a lot of minority, Black Americans, first generation Americans, you're going to see some of the biggest challenges because from our communities, we often had to take student loans to go to school. We are carrying that student loan debt, so that impacts our DTI ratios. You could have, and in often cases this does happen, where you have individual borrowers who are very high income, but they're just lacking that debt to income ratio of 43% or better, or lower rather, to qualify. And that's one of the big challenges. And there's a number of different policy solutions that both Fannie and Freddie Mac, as well as the FHA program, which I ran for several years, are doing to try to address some of this, changing the way student loan debt is handled. But at the end of the day, with house prices and rates as high as they are, getting to that DTI and getting approved is always going to be a challenge. And it's particularly going to be a challenge for those communities that are coming at this from a lack of generational wealth to begin with. And just two quick other things in terms of challenges: down payment, again, for minority communities, particularly for the Black community, down payment is consistently one of the largest barriers. And there are no easy answers to that. And particularly when house prices are unaffordable for most Americans based on their salaries, down payment is going to be a challenge. And then finally, when we're thinking about home ownership, we do need to think about sustainability and keeping people in their homes and looking at policies which are making sure that borrowers have that ability to stay in their homes, that underwriters are taking into account the reserves that people have at the end of the month to pay their loans. So DTI, down payment, and concerns about sustainability are some of the big challenges right now.
Yeah, so I want to come to Jonathan, then I'm going to go to Michael and build on this. Jonathan, how can Black-owned banks address or alleviate these challenges, particularly for young adults?
Well, I can tell you how we're currently addressing them. But in addition, I just want to point out a few other things. When we talk about affordability, wealth is a huge piece, but something else that's often overlooked, and as a practitioner, we see a lot of this, is insurance rates. Insurance rates in coastline communities and in areas where extreme weather are increasing. So not just the Gulf Coast, but the West Coast and several other areas in the country are experiencing abnormal increases to the tune of 100 to 200% increases in premium, which will also impact the affordability of purchasing that home, because all of the programs referenced so far will require insurance. In addition to that, what we do in minority institutions is we know the community, we know the jobs. We know the jobs that the people in the community are working. So if they're seasonal employment, if they're gig workers, if they are self-employed contractors, we understand how to look at that credit and how to look at that information. And we have the time and the longevity in the servicing portfolio to understand what we're looking at and how much of a risk that poses. Because contrary to popular belief, most minority-owned institutions actually have good collection rates, especially among credit that's perceived to be risky by the large aggregators and the insurance companies. But that credit is not risky. They actually pay very well. A program that's critically underutilized in this country is a program housed with HUD, and it involves a Section 8 borrowers using the benefit of the voucher to assist them in purchasing a home and providing a long-term sustainability for that family. The delinquency and the default rate on that program is extremely low, and the users of the program are very engaged in terms of keeping their home. Another context that we use in Black banks and in minority-owned depository institutions is we look at ways for borrowers to stay in those homes. So what we find in our data, this is not national data, but this is the data that we observe on our servicing book. We find that a lot of homeowners run into trouble in keeping their homes, believe it or not, because of maintenance and maintenance issues relative to the home. So often that's not thought about. But when you start talking about in the Midwest or in the Deep South, not having an air conditioner, or having roof problems anywhere in this country, or building issues that don't allow for the building to be able to make necessary repairs so that the building can be habitable. Those are things that will interfere with our homeowners' abilities to stay in their homes and ultimately lead to default. And so we look at all of those possibilities and try to provide creative solutions that are allowed under the guidelines that govern all financial institutions to be able to put people in homes.
Yeah, I mean, those insights are profound. And we know that housing is so critical. I mean, roughly 50% of wealth oftentimes is generated comes initially through home ownership. But we know, as we've heard from Giselle and Jonathan, that low home ownership rates and even low business ownership rates in the Black community, particularly in the sustainability of those assets, really contribute to this. And I think highlighting the fact that there are roughly 20 Black-owned banks really speaks to this. So, Michael, I'm curious for you, what challenges do Black-owned banks face in expanding their reach and impact and promoting home ownership beyond their local communities? And what strategies are they using to scale these efforts?
Yeah, no, that's I think Jonathan Giselle's comments really kind of set up quite accurately and profoundly exactly this kind of conversation. I mean, look, Black banks face, I think of it as a two-layered issue. I mean, they certainly face the challenges that are consistent with all community banks. We know that assets are increasingly being concentrated in those larger financial institutions. Two, the competitive disadvantage oftentimes of those community banks, including MDIs. But at the same time, we also know that MDIs, as Jonathan really kind of alluded to, are the first line kind of responders when it comes to the challenges faced in the Black community. And so that suggests that, we talk about financial inclusion often on the demand side. We talk about it in terms of unbanked, underbanked, but there's also, I think, an important conversation that we have to have around financial inclusion around MDIs. One way to really get at this kind of, to motivate this kind of conversation is to really think about how technology has begun to expand across the financial services landscape, even moving into things like machine learning and other AI type capabilities. On the one hand, that produces greater efficiency, but it also comes with it high barriers to entry on the front end, making it difficult for some smaller institutions who might be more capacity constrained to make those kinds of investments. And so, with all of that, we looked at research looking at actually MDI credit unions using data from the NCUA. And what we found was that Black credit unions, I mean, here it's important to be careful because, on the bank side, Black, Hispanic, you can divide them up equally. On the credit union side, there's overlap. So Black credit unions could also be Hispanic credit unions at the same time. So as a researcher, that kind of nuance is just always important to point out. But, what we saw was that when we looked at Black credit unions, they were significantly less likely to have some of those key technological apparatus, things like websites, mobile applications that would allow the ability to stretch stretch their capacity and, frankly, to expand their benefits. The second part, I think, is around that capacity. We talked about the benefits that Black banks bring, but we also know that as a depository base, they tend to be smaller. We know you've already talked a lot about Rashawn, and I think Giselle brought it up as well. Just not a lot of them. Even when we combine the credit union and the Black bank institutions together. And so, I think there's part of what are the things that we can do? I mean, one of the things that we can do is really encourage participation in the federal home loan banking system, in the GSEs, things that allow them to make those types of mortgages, perhaps take them off a portfolio, which then in turn allows them to expand their capacity. So again, I want to leave you, two real ideas around capacity, around technology, that the research suggests are ways in which we can make the types of changes that allow Black banks to expand and grow their benefits.
Yeah, so this is great. And I want to build on this conversation and a vibrant conversation that's happening in the chat about this panel, particularly from Mike Green and Dr. Ange Marie Hancock and others. Giselle, I want to go to you, and then I want to do a round robin with Jonathan and Michael and try to get in a couple of additional questions. And part of the discussion that's happening in the chat is really thinking about financial literacy, education programs being integrated into Black-owned banks to ensure that prospective Black homeowners are well-informed, confident, and equipped to navigate this, but also thinking about innovative financial products, which Michael was just talking about, and some of the disparities there. And importantly, not just educating Black homeowners or Black business owners, but larger banks and policymakers and people even outside of the Black community about the experiences that Black homeowners and Black small business owners have in trying to get the capital they need and the loans they need to build wealth. So Giselle, can you speak to this? I know it's a lot in this question, so feel free to take a part and then people can just build on it. But we'll start with you.
Yeah, well, that's great. And this is something that a lot of people here in Washington, where I'm based, are thinking about. We have a number of different initiatives, but there's one umbrella initiative, and it is the National Black Homeownership Collaborative, whose stated goals are 3 by 30. So 3 million new Black homeowners by 2030. How do you do that? Well, there's a lot of different ways that you can do it. But in the area of credit underwriting and how can we try to address these issues and push this issue of Black homeownership forward, there are a couple of things to think about. I think the first thing, building on what Michael shared, is that all of the challenges that MDIs are facing, they're facing it within a context that is larger than them. It is a context of the greater banking system. So let me break that down for you. When the largest banks are addressing regulations pertaining to revenue from interchange fees, for instance, which is a major source of revenue for MDIs and for MDIs, including banks and credit unions. If there are restrictions on that, that's going to affect those banks' lending. When there are new capital rules impacting the largest banks, which then in turn could impact independent mortgage banks, which we haven't really talked about a lot here, but independent mortgage banks are non-bank lenders who actually right now are doing the majority of mortgage lending for retail consumers. when they are faced with not having liquidity and warehouse lines of credit in order to do lending to borrowers. And they're doing about 70% of lending right now. That's an issue. So those are some of the bigger macro issues that are impacting the entire banking system. On the plus side, when we're thinking about solutions, I'm really glad that Michael mentioned the Federal Home Loan Banks, because this is an issue where MDIs have access to the liquidity that the Federal Home Loan Bank system provides. And the Federal Home Loan Bank, they are a system of 12 banks that their job is to provide liquidity to financial institutions. Right now they are undergoing a review of how they can better support their core mission of lending. And so, when we're thinking about solutions, everyone is going to be looking very eagerly at a forthcoming report that the Federal Home Loan Bank systems regulator is coming out with shortly, the FHFA, which could provide a lot of liquidity to MDIs and potentially recommendations to provide liquidity to independent mortgage banks. And that in turn, by those institutions having more liquidity at their disposal, can provide more opportunities for credit. So I think, just to recap, thinking about the challenges that smaller Black depository institutions face within a context of the overall regulatory landscape and regulatory burden. And then separately, in terms of solutions, I think that it's going to be very interesting to see how the FHFA is shaping up to recommend to the Federal Home Loan Bank system how they can support lending, particularly lending done by MDIs, which are so important for the Black community.
Yeah, Michael, let's get you in on this question. On thoughts about financial literacy, education, addressing discrimination, but really talking about solutions and talking about policy solutions in particular that can address some of these discriminatory policies.
Yeah, let me say a couple of things here. The first one is, there are, with respect to MDIs, there are some steps that are being taken, although it's worth, thinking about the efficacy of those steps. You think about the Department of Treasury's mentor-mentee program, where you're trying to match MDIs with majority banks, almost in an advisory kind of capacity, to really kind of help go through some of those broader economic cycles and other kind of challenges with the business. Now, to that being said, there's certainly some anecdotal thoughts to suggest that there's not enough participation coming from majority banks to really participating in this program. The second part is whether or not it's actually getting to the need of what that MDIs say that they have. Another one is Treasury's ESIP program. Really kind of really garnered toward targeting MDIs. As well as kind of the broader mission-oriented finance community, really aimed at increasing access to capital that hopefully will find its way around communities of color. But again, we get at questions. I think we get at very important questions around whether or not we have the right pipes. Like, yes, we've given to particular institutions, but do we have the pipes to get it to communities of color? One way to think about that in a concrete sense is that the Black community is less likely to have internet service than the white community. So if all of your applications are online and internet-based, that could be a potential bottleneck in terms of the ability of the Black community to turn around and be able to access it. But let me just say one more thing, Rashawn, around home ownership, and that's this. We've talked a lot about alternative. Well, we've talked a lot about kind of what is needed to expand mortgage credit. One thing that I will add is certainly around alternative credit. What are things in which we can do around, say, rent reporting on the positive side? Do we get rid of medical reporting? Those types of issues. But what I would say is that to a degree, that is an imperfect way of simulating exactly what it is that Black banks are doing, which is that they are taking the nuanced financial profiles of people of color and finding creative solutions in the face of difficult times that expand mortgage credit. And as Jonathan already pointed out, the risk of delinquency and default is actually on par with more traditional type mortgage lending. So, I say there's a part of this in which other institutions can actually learn from the comparative advantage that MDIs have in terms of lending to these communities as a way to expand credit to the Black community overall.
Yeah, I mean, we know that Black people in the Black community has always done more with less. And we saw that in a 2022 CPAR publication, the Black Dollar Part 2, Cooperative Black Economics in the U.S. that people should check out. People should also read some of Michael's work and even Andre Perry's work from Brookings, Know Your Price, where he found that in Black neighborhoods, the average home price is $48,000 less on average than in predominantly white communities, even holding all else constant. So, Jonathan, I want to come to you in the last minute that we have and really elevate something else that's percolating in the chat, which is around thinking about partnerships between Black banks, other lenders, and housing organizations, and the way that home ownership financing solutions are working to collaborate with Black banks and government agencies, nonprofits in particular, and community organizations. Is there an example that you want to highlight from your work that you think is important to lift up in the last few seconds that we have?
No, yet. So we partner with nonprofits and government agencies all around the country to deliver homebuyer assistance, down payment assistance, closing cost assistance, and the like. The solutions that were just shared by my fellow panelists, we participate in a number of those. And the only thing I want to add on to the back of that, which ties into your question, is that it takes time. Because even with that, minority banks, Black banks, they all punch above their weight, well above their weight. And so introducing the resources and the technology to the organizations, it's going to take time for those organizations now with the capacity there to be able to resource up to deliver on some of these things. There's a few things that you want to keep in mind, though. Our customer cost is much higher than majority institutions' customer costs for a variety of different reasons. But the best way I can benchmark it for you, majority institution peer banks, average deposit balance might be $5,000, ours might be $150. But the cost to service those accounts are the same across the board because it's by number, not by dollar amount. In addition to that, when we talk about policies relative to home ownership and home buying and partnering with nonprofits and other NGOs, I think they'll all say the same thing, that the consideration on income limits relative to those grants ought to be reconsidered. Because when we think about housing prices today, housing prices are much higher than they were when these programs were first developed, and much higher than when the policies were first written, and even within the last 2 years, they've gone up. I mean, the conforming jumbo limit has increased astronomically over the last 3 years, and having an 80% AMI or 100% AMI cap on a number of these programs is remarkably limiting, especially when in many cases 120 AMI with a car note and with student loans, as referenced before, still isn't enough to buy an average home in most communities in this country. But partnerships exist. MDIs, Black banks are working with these organizations, and these are some of the additional items that should be considered and looked at in terms of policy changes going forward.
Yeah, that is a great way for us to close out this panel. You all have been phenomenal. Jonathan, Giselle, Michael, I could talk to you all day. And by the chat here, people are just blowing it up, chiming in, talking about everything that you all are talking about. So I really, really appreciate your time. And again, we really appreciate the Congressional Black Caucus Foundation for hosting this important panel and this summit today. So watch a quick video and then be sure to come back later today to tune in for the rest of the summit.